Thanks for tuning into this video. I'm going to recap and review the past 3 trading days, going over some of the trades we took in my Discord community, along with some market context and some trading setups that we could use as lessons to learn for trades going forward. Before we do begin, if you want a very good trading resource, be sure to follow me on Instagram. I post daily trading recaps along with very good trading tips and tricks. The link to this will be in the description below. And now let's get right into the video. To understand the picture a little bit better, let's go over the pre-market plan I post every single morning in the Discord. So we'll first do the S&P 500 because it's the market. It's basically the king daddy. I give my focus to this, and then I give my second focus to the equities behind it and see if they have setups that agree with the market. So we had the 4,058 demand. We wanted it to hold. If buyers were responsive there, we're going to slowly work our way back up to the 407 1.5 supply. If we did not bounce off of demand, we had more a little lower that we could grind down into around 4,050, but that's not something that happened that day. So the main 2 zones we are watching, the areas of interest, these are just areas, they're imbalances that I'm looking to be active in the market. And then I wait for price and volume to confirm it. And then we can look to take perfect, low risk, high reward trading setups based off of it. So let's maximize this. So the market was pretty balanced. And when I mean balanced, I mean an equilibrium between buyers and sellers. Low momentum, low volume. So the conditions are a little different than we would normally see, especially if you do trade options. So in this market, I've been taking profits fast whenever I have them. Because we've been having low momentum, there hasn't been any crazy trading ranges. We've been moving in a tight range. Although respecting zones pretty well, the ranges have been smaller, so you have to take profits fast as we're not getting 40, 50, 60 point days like we used to. If I'm shorting supply, since we are in a bullish market, I'm looking for extra confirmation. I don't want to step in front of a moving train because buyers are so strong. They're basically outweighing the sellers or the supply that's already existing at previous imbalances. So I need extra confirmation for me to take those trades. And I'm being very, very selective with the setups. And I have to adapt. I've been telling members this all the time, to adapt to the current conditions, especially since we're making all-time highs every single day. So this was on Wednesday, April 7th, balanced overnight. We did have this demand zone, which we were selling off into at 4,058 before the market opened. So if you do trade futures itself, this was a valid entry. We're going to see this a little later in the week. And then the market did start rallying, and we moved in the first 45 minutes in a 6-point range, 7-point range. In 45 minutes of the market open, strong move off of this 4058 demand imbalance, and we had all gates. We didn't have resistance, didn't have any more supply until the 4,071.5 supply zone. So we're flagging above VWAP. VWAP is pointing up. We did finally get that rally inside of supply. I did take this long in the first 5 minutes of market open. I'm against trading that. However, I did see momentum and I did trade SPY options, not the futures. So as soon as I saw buying pressure coming in, I did take this trade long. An hour and 15 minutes later, we did hit supply and we did stall out. So for my past recaps, I don't like flipping from long to short, short to long. If I'm in long and I take profits, let's say at supply, I'm not going to take profits on my long and flip to a short side. Although this trade did work beautifully, volume not too convincing. And again, really not proper confirmation other than price stalling here at supply. But we did sell off and we did drop where we started bouncing, again rejecting VWAP. And one thing I want to note is this volume down here. This is the type of analysis that needs to be done as the market is trading. You need to be at a blink of an eye being able to make trading decisions, whether it be buy, sell, hold off. You have to read what the market is currently telling you. I stress that a lot. So we did sell off, and at this point everybody was super bearish because of that quick 16-point drop that we saw in a matter of 30 minutes. But no reason to panic. We did have this demand zone that bounced not only once, but bouncing again. Look at that nice buying volume down here with heavy selling pressure. If you go to a smaller time frame chart, let's go to a 1 minute. Let's keep it on a 5 minute actually. So we did bounce off of the zone. Volume really was there. And then we were consolidating. Now we just have to reclaim VWAP. As soon as we did reclaim VWAP after it looked pretty bearish, rejecting it once, twice. So again, if they're bullish on something, they're going to make it look bearish so you could short it. Or if they're bearish, they're going to make it look bullish so you long it. They feed off of your liquidity. It's the basis to the supply and demand strategy. So we did reject VWAP twice, did come down a little bit to stop out some traders, reclaimed VWAP, and then look what happened. We came into the supply zone and we double topped inside of supply. It sold off nice. We can consider this area right here to be somewhat of a demand imbalance. However, with 20 minutes left in the open and the time is ticking on a Wednesday, I don't really see any necessary trades down here, although we did rally. So a lot of problems that some traders have is, let's say they avoid a move and it did rally with their analysis, but they didn't take the trade. They have FOMO, they'll chase it, or they'll get frustrated and they'll prevent themselves from doing something on a future trade because in their head they're like, oh, I could have made X amount of dollars on this trade. They have FOMO, they'll force other trades in the future, and it's just a bad mental state to have. You have to do what the market's telling you now. If you miss it, give yourself a pat on your back because your analysis was correct. If you took the trade and made money, even better, but do not have FOMO or force any trades. Next, we had Roku. The reason why this was on watch was because we bounced off of demand last week, and I wanted to see continuation with yesterday's volume. However, a pullback into 354 demand would be a good place to get long. So now going to the chart, what made this on watch was because yesterday's action on Tuesday. Look at that beautiful volume. Look at that beautiful rally compared to what we previously have been seeing. So very nice action on that. We could look at it as some type of accumulation or some type of agenda to push price a little higher. So we did want to see continuation on Wednesday. We did have this 354 and 23 cent demand zone. It was invalid if we got below 351 to 350. The market pulled back. And one thing I want to note here is look at these little lower wicks on this is a 5 minute chart. Lower wicks on a 5 minute 15 indicate buying pressure, and anything that's signifying buyers are present and active at demand is a good enough confirmation to get long. Then the market started rallying. We did miss supply by about 50 cents. However, if you did get long here around 354, 356, you should have taken some profit along the way, even if we were making higher highs, continuing to make higher lows as well. And as soon as we did break through this little trend, if you want to call it, as soon as we started to see the switch flip to the sell side, where we started to see some bearish momentum, kind of like the backside to this price action, this would have been a good area to sell if you did ride the trend. And if you did scale profits along the way, it's okay. You just have to ride the trend. At the same time, Roku bottomed. The NASDAQ formed the bottom. Keep an eye on this chart. We sold off, bottomed out, and then started rallying. This is why I give precedence to the market over underlying equities, because at the same time Apple was selling off into demand, NASDAQ bottomed, and we had a very strong rally, from this demand imbalance. So keep an eye on the market. If it's trending, if it has momentum, and if it has clear direction, the setups on the underlying equities will have more confirmation, and they'll be easier types of trades. If the market is choppy and not giving us good opportunities, the setups in the underlying equities that follow the market are going to be much, much lower type of quality trades. One thing I do want to mention is I stress this a lot, to follow the process over the profits. If you trade well, you follow your plan, you leave your emotions out of it, the profits will be guaranteed to come. The last 3 trading days of the week, my Discord group combined a total close to $13,000 in profits. This is what happens. The profits will come as long as you focus on the process, trading your edge only when it's present, and focusing on the best and the highest quality types of trades. Then on Thursday, another all-time high on the S&P 500. No reason to be bearish at all on this market. You wait for pressure to be put onto bears or onto bulls, and then you could be bearish. So we had demand at 4,080. We also had demand at 4,074, 4,070, a bunch of smaller imbalances. And the ideal one that we wanted to hold was 4,066.5. and much lower if we did have a bear case scenario. So overnight, again, the market was rallying. We did make an all-time highs, sold off a little before the market opened. And if we did look at the first two candles, we did have this demand imbalance, which we were bouncing at around 5:30 in the morning before the market did open for the futures traders. Then we sold off first 10 minutes, really no confirmation at this demand zone. A lot of people are programmed to see green and they think to buy, but there really was nothing telling me buyers were here right now. Then the next candle, we completely sliced through the zone. We did have a little bit of a lower wick. So now the key is finding if we have intention or some type of reward to the buyers if they do take us up. But now that we're below it, we can remove that zone. Fast forward to the next couple of candles. We did reject VWAP, and I was telling members in the commentary tab where I update my thought process throughout the day. I was saying, listen, the selling pressure is evident. We are rejecting supply. We do look like we're coming to take the low, but I can't be so bearish just because, this is the case. The bigger picture is bullish. So if you did short this VWAP rejection, we did come down, but again, we had this demand zone down here, and it's a perfect trap for liquidity when we break the low inside of this demand zone where you started to bounce. And then as soon as we got above VWAP and above this, downtrend line, if we were to draw it out like this, we came back and we back tested this wedge. If we were to extend this a little bit, we back tested the wedge. As soon as we reclaimed VWAP and based out a little bit above it, agreeing with value, the market started rallying, missed the supply target by about 2 ticks in the afternoon, and eventually end the day we came to supply and closed the day very strong, something similar to what we're going to go over in a couple of minutes here. Couple of other setups. Normally don't watch Shopify, however, a member brought this to my attention. We had all gates open once we were above resistance around 1200, 1190 from the pre-market plan. And one thing I do want to mention is the market, all it is an advertising mechanism to attract participation, provide liquidity for the other opposing participants to either stop out or build onto a position. So we did break above 1200 and we did rally about 15 or so points. So if you did catch this 1200 break, there really shouldn't be any excuse to look for more than 15 quick points on a $1,200 stock. And if you're trading options, that's going to be a very big return. However, you do have some people that chase it. They wait too long. They're a little hesitant to pull the trigger. And that is something that I think a lot of traders have to work on. But let's say you were to get long, let's just call it up here near the highs. Then the market starts pulling back. What happens is if they have an agenda to push this up, they need more liquidity. The only way they could really build liquidity to the long side is if they bring the market down. They could leverage into their position, hence an equilibrium or a base. And that's exactly what happens. They know majority is going to be long, especially in the first 15 minutes with strong buying momentum up here. At one point, this was a very large green candle to the upside, sold off, selling pressure was evident with that lower wick, stopped a lot of traders out once we got below VWAP, and selling pressure, it looked like, the end of the day, about to take out the low. Then gradually started grinding up, finally reclaimed the $1,200 mark, and rallied pretty much going into the whole end of the day. AMD, this was a good setup from the pre-market plan. However, there really was not confirmation. Like I said, the market is very strong and we did come into supply and we did reject. But while the market was developing, there really wasn't any proper confirmation there. And then today on Friday, I went live with the room just because I didn't want anybody to catch FOMO due to how balanced out we were. But the market was extremely balanced. Just like on Wednesday, before the market opened, we did sell off into this 4,081 and a half demand zone. And then as soon as we opened, exactly like Wednesday, we started rallying. And then, so the futures traders did catch a nice long entry down here. If you do trade options and have to wait for 9:30 when the market does open, you could have got a couple of points, but it was very limited due to the low volatility and low momentum. And it definitely will boil your emotions. So it's very important to stay calm. That's why I went live today. And then we had the supply and balance at 4,099 and a half. Pretty crazy to say 4,000 now on the S&P. Let me know what you guys think. Is it crazy to say 4,000? I mean, we were just at 3,000 for a little while. And then end the day, just like we've been seeing, a crazy nice rally, about 20 points. This last 45-minute move was more than the range that we saw in the first 6 hours of the market open. So pretty crazy. This is the type of momentum and movement you want to see right here. Exactly where I'm highlighting. The setups, like I said, when the market's like this, are going to be lower type of quality setups. So let me know, do you guys enjoy these videos? If you do, drop a like. I don't know if my audience does like these types of videos. I do recaps for members in the Discord whenever needed throughout the week. However, the ones I do post to YouTube are a little different. So let me know, do you guys like them? If you do drop a like, subscribe to my channel, and be sure to follow me on Instagram. It's a very good resource. But besides that, I'm going to end it here, and I'll see you all soon. Peace.